Hey everyone, this is going to be a quick video on optimal trade entries, what to look for and how to use them. This is pretty much derived from a video ICT put out a while back on optimal trade entries. It's about 40 or 45 minutes long. I highly suggest checking that out as well. I'm just trying to summarize it in a few key points and try to deliver it in a shorter format. So for the criteria of optimal trade entry, the first thing you would want is a valid market structure break. So in this case, I have an example drawn of a bullish optimal trade entry where hypothetically, say price breaks higher highs and has some displacement to the upside. Then you would want to draw a Fibonacci retracement from that low to the high of that move. And you would be looking for some retracement back down into this optimal trade entry zone. So that is between a 62 and 79% retracement of the move. You ideally want candle bodies to be respecting levels of this retracement. If you do manage to enter somewhere in the middle of this optimal trade entry, then inherently your trade is already going to be at a 2-to-1 risk to reward ratio if you just target the top of the retracement high. If you want to go for more targets, ICT has recommended in his videos that your first scaling be at the highs and then you want to hang on to more. So you can see some targets at the 23.6% extension, 61.8, and 100%, which is essentially a measured move of the prior retracement. And after you take profits at your first scaling, you can go ahead and push stops to break even normally. And again, how you choose to play it is kind of up to you, whether you want to just take off at the highs for a nice 2-to-1 or can hang on to a portion to see some higher targets. I think a good way to look at profit taking in this scenario is kind of drawing a bell curve of all these profit targets. And so if you were looking for the full measured move, you could take off, a small portion at this first scaling target, take off a little more around target 1, then around target 2, you can exit most of your position at that point and just leave some runners on to see target 3. Now for some examples of how this would be played, these are all going to be charts from the NASDAQ futures. This particular chart is on an hourly time frame. So we have a nice market structure break here where we do have some displacement below these prior lows. And if we draw our OTE fib levels from this high to this swing low, we can see that our OTE resides somewhere around here, which coincidentally there's a fair value gap in this area that you could use to refine your entry even further. The price does retrace into this area, so you would want to look to go short, given that higher time frame structure is now pointing to the downside. Your first scaling would be right about here when it hits the retracement low in this case. Then you could take off some more once it hits this 23.6 retracement, and again at the 61.8. And being that this is the current price of the NASDAQ futures, it is possible to see target 3 in a matter of a couple days, if at all. Now we have an example on a 5-minute chart. So this time we have a market structure break to the upside. We draw our Fibonacci retracement using candle bodies from the low to the high of the move. And we see an optimal trade entry right around this area, which again, there's a fair value gap to refine that entry even further. If you were to enter in this area, you would put your stop below these lows, and you would be able to take off your first profits at the retracement high, second profits at the 23.6 retracement, and again be able to take off most of the position at the 61.8 extension. And one last example, this time on the 1-minute chart, we have a market structure break again to the upside, a couple of fair value gaps in this area here. Price hits the 61.8 retracement level, rejects it pretty immediately. Ideally, you would want to enter within this zone, so maybe put a limit order at the 61.8 retracement. Stop at the lows using the candle bodies again to draw this retracement. You would take your first profits at this level here, take some more off at the 23.6% extension, and then again be out of most of the position at a 61.8% extension. So I hope that was a sufficient demonstration. If you have any questions, please feel free to comment below or send me a message on Twitter. If anything here wasn't clear, if you have questions on how to apply this in real time. But that's all I have, so thanks again, and I'll see you in the next one.